Hmm.
Says going live. Excellent connection. No way, bro. You're telling me we were not live this entire time?
I was trying to comment.
Oh, come on, bro. Where the team at, man? Nobody want to tell me? Just like that one time, bro. I was 30 minutes, Stefano, 30 minutes. I was spitting about the economy. I was on mute the whole time. Nobody wanted to fucking tell me. It was like 10 minutes in. Somebody's like, yo, you're on mute, bro.
Oh my
I'm like, yo, come on, son.
That's 78. Yeah, I have a small position on the 61, and then I have my limit at the 78.
Dude, that's short, man. That's short.
That short was nice. And no, and you know what? I took loans last night too at this.
I saw.
You know,
Crushing it. All right. This thing is rejecting pretty heavy. I might have to start scaling in.
oh man, that's a nice rejection.
It is. All right. So, ladies and gentlemen, I'm actually going to scale in a small position. Small positions, people. So I'll be able to enter a position if it does retrace. 11,500. That's the zone I'm watching. So now I'm going to be honest. I am low-key holding a long position from 350 from yesterday. But I did enter a second position here. A little bit of drawdown. So the stop loss. So basically that first position looks like this. And I'll show you guys the second trade that I'm looking to take.
Bro, and gold is flying. Holy shit.
Something's about to happen with the dollar. It's almost a 1-2. I don't really like that, but the probability is there. I took a smaller position size because as you guys can see, the stop loss is a lot larger. It's below the 88.6 fib. The second trade has a much better risk to reward. It has about almost a 4-to-1 risk and reward. So waiting for an entry will always get you a better risk and reward. But the high probability trades sometimes require a bit more risk because the market can just start flying. So for those high probability entries, I'll usually put a bit of a higher risk, or sorry, a bit of a lower risk to compensate for the big stop loss. For the higher risk and reward trades, these are the ones I tend to go a bit heavier on because I don't need as big of a stop loss and the risk and reward makes more sense.
That was the level.
Yep. I mean, I see it. The thing about the NASDAQ market open is you're 1 wick away from just the retest of a 78.
Yeah.
The market loves to accumulate at the 61. Accumulate orders, wick to the 78, and then pop. So I am expecting something like that. It might not happen, but that's, that's my base case.
Yeah, I think that's the norm for this high volatility pairs, You must be in profit. Yeah, almost be in profit. God damn it.
Bro, I think my Wi-Fi is slow. Hold up.
We're looking at blues, baby.
Oh wait, I'm on the wrong page. I am looking at blues.
Yes, sir.
But patience is key. Fed chairman's about to start speaking in 10 minutes. So anything can happen.
Oh, that's something.
Patience is key, brother. Patience is key. This thing could whip down to the 78. I accept this. I will re-enter.
Me too.
All right, y'all. Welcome. So I just realized that we did get streaming a little bit late today. I don't know what was going on with YouTube. I clicked stream now. It wasn't streaming. y'all can blame YouTube for that. But if you guys are on YouTube, it's good to see you. While you're on this video, make sure you guys hit the subscribe button and make sure you guys hit that quick like button so it promotes the stream to other people. What we're going to be doing today, my name is Roy Dunya. I'm the co-founder and CEO of Chart Addicts, the #1 educational service for traders worldwide. I'm going to show you guys this the news schedule for today, the news schedule for the rest of the week. We're going to be live trading. I'll talk to you guys about the recession and crypto. Hopefully you guys leave with some knowledge that you didn't have before. The only thing that's happening tomorrow that's relevant to indices is the consumer sentiment. The US consumer being one of the strongest economic forces in the world, the sentiment of the consumer is very important. If we're confident about our ability to spend in the economy, then that's going to be positive for everybody else. Manufacturers are making more stuff. Suppliers are supplying those manufacturers, and it goes all the way down the chain. So I think that's just going to be positive news. So we already had a bunch of news come out this morning. We had flash manufacturing PMI come out negative. This is like an inflation index for the manufacturing sector. So I guess this is like a confidence index. And then Chair Powell testifies in about 8 minutes. So during his testimony, they're going to be grilling him about questions regarding the economy, the upcoming recession, and everything in between. So I am in drawdown on that oh damn, I'm on the wrong screen. If you guys are on YouTube, don't ask me for broker recommendations. If you guys really want a recommendation, not a recommendation, but some options of places I've used, message us after this. So I'm holding a bit of drawdown, but at the 78 and 88.6, I'm looking for some kind of rejection. If there's no rejection here, people, if it just starts to break through, I'm getting out. It's pretty simple. Upon a break of the 11,500 or 11,480 range, that will indicate a reversal of the trend, and that's when I'll be looking to exit the position. So at the first entry, I put about probably a little bit less than my normal, like less than a quarter of my normal position size. And then at this entry here is where I'll be looking to put in larger positions.
The moment of truth right now. Like, see.
Yep. I just entered one more. So normally I enter a 0.5 on this account. And so what I'm doing is I entered a 0.1 at the top entry. And then right now I just entered another 0.1. And then if it comes down to test one more time to create a new floor, I'll enter a 0.1 or a 0.2. I'm in profit on the second one.
And then you usually close your higher position whenever you're in profit on the first one, or whenever you get to break even or something, or
Yeah,
just
in break even or just above profits. If the move is really pushing, I'll give it a chance to play.
okay.
But if it's just like messing around, what I'll do is I'll get a chance to get out of my top position in break even, hold the lower one. And then if it, that lower one is usually pretty low risk. So I don't mind holding it.
Right.
It's that top one that'll get you. You'll be sitting in drawdown like, oh no.
I know, right? It's like it's been be sitting in red for quite a while. But like, oh no, what's gonna happen here?
Yep.
I just close my phone. I just delete my app and everything.
I don't know if I'm deleting the app.
We're trying to implement the set and forget thing from Alex G, huh?
No, I don't know about all that. It works. Like I got to give him props. Like that saying goes back to stocks, which is just like you want a strategy, like an investment strategy that you can set and forget. Yeah. It works for long-term and long-dated investments.
Yeah.
For day trading, I'm kind of like, we had a really good conversation about this, me, Raul, and Alex on our podcast, because we have a swing trader and a day trader, kind of like, showing both perspectives. And the longer, Raul said something that I agree with for sure. He said the longer you're involved, like the longer you're in a trade, the higher the risk is of reversal or a news event or something happening.
I'm with them on that. Yeah.
Definitely. Yeah. So I'm in the camp of get out.
There we go. Liquidity grab.
All right. So I'm in profit. on, so the middle position is the first one I entered. The bottom position is the one I entered at the 78. So as soon as I'm above break even, I'll be able to close that top position and then just hold the bottom one. Just let it run.
Yes, sir.
This is very lovely 1 minute bullish divergence for me. yo, you on the wrong stream, bro. I'm fucking around. No, but I'm not, I don't do that anymore, man. I don't do that anymore. I have a healthier lifestyle now. I'm trying to be the best trader I can be. Personally speaking, the smaller time frames just don't do me any favors. There's too much random movement that looks like pattern, but it's not a pattern. It just looks like a pattern, but it's really just fucking random. And so there's a lot of random movement on the smaller time frames that confuse the overall pick, like the big picture. I'm sticking to my 15, 30s, 1 minute or 1 hour. Now look, I'm above break even on that on that first position. So what I'm actually going to do is close it.
Close it. There we go.
Profit. And now I'm holding this bottom position, sitting in some blues.
Wow, man, you're giving so much free sauce right now. It's just like this guy is, guys, you guys better take notes or do the same thing that this man is doing right now, because this is what's gonna get you profitable. Serious.
Stefano, can I send you my entry?
Yes, sir. I probably have the same entry as you, or maybe
Bro,
you
stop fucking around. Send me your entry.
Let's see. Okay, so I tell you, I'm at 545. That's the best I could get.
545.
Yeah, 545.
Bro, you can't, bro. I'm gonna take you. You can't do that, bro. But it's the Wix for me, bro. Chill out.
We are in a competition. All right. Okay. So.
No. It's not a competition. It's not a competition.
Whoa, that's an entry, bro. Oh,
now we got over $1,000 on that trade.
There we go. Stop playing.
Yo, Roy, some people asking about Enigma in the chat.
The Enigma Signals app will be launching later this week. All right. It's been taking us a little bit of time because we're trying to work out all the kinks, make sure that's a perfect user experience for you guys. Give us like 2 or 3 more days. We'll have it fully up on the App Store, ready to download. If you guys want to get early access, look, if you're on this stream, listen up. The Enigma Discord, I'm going to drop in the YouTube comments and I'm going to drop in the Zoom comments. I want you guys to go join this chat and get a free month of Enigma when it launches. It's a free month of our signals, the same signals that we just called today and the signals that we'll be calling for the rest of the week. You guys heard Stefano's voice on here. We have some incredible people on this team. But this is going to be your one chance to get a free month of Enigma when you sign up. So join this Discord chat. It's free Discord chat. Get a free month of Enigma when we launch. You can download the app for free and get it popping. Here we go. Let's go. PMI numbers were bad. Whoever you are, stop eating while mic'd up. Okay, why don't you hold these? Hot, dusty 3000. Best of luck on your trades today, Roy. Much love. Kiana Star, I appreciate you. I appreciate that energy. I appreciate the support. Thank you. If you guys are on YouTube, go ahead and send this shit to your friends. Go send this to your group. Send this link to your group. Hey, Roy, do you have a signal group or course? I need a mentor. So you guys can go check out Chart Addicts, fx.com. Oh my God.
I love to see that, bro.
Yo.
Oh, we are in motherfucking blues. I'm sorry about my language.
Chill. Look.
Excuse me. I'm sorry. Excuse my language.
It's just another day. Oh my God.
It's just another day in the Chart Addicts community, baby. Stop playing. We do this on a regular though. We like, guys, we go and you guys don't let me lie. Whoever's a member, y'all all know this. You know, we do this on a regular. We go Monday. We got different type of educators, different type of traders, and they go live Monday through Friday. You know, it's no excuse. Beautiful trade, Roy.
Bro, we just hit 2,000.
Yes, sir. Bro,
You see that liquidity grab, bro? You see how they were claiming entries and then
grab.
sink right to the bottom, bro? Stop fucking with me.
I got in at the 61.8, but I was like, I should have entered. I was just waiting for the 78 because I had the limit at 78. It didn't hit it, but
I'm moving my stop loss to break even.
I've been at break even.
I was given it a chance. I thought I was going to wick one more time, but the Fed chairman is now about to speak. I'm expecting this thing to kind of launch to the upside. It could do anything it wants because it is a high risk news event, which is why I've now protected the trade. I'm in a scenario where there is zero risk on this position, but there is a huge upside if the market decides to start gunning, much like it did yesterday off of, right before his speech, the market just started to, crank up. So if we see anything like that, we have huge upside potential, but no downside risk. And ladies and gentlemen, that's how it's done.
Don't forget to book your blues, people.
Don't forget to book your blues, secure partial profits, because if this thing reverses, you don't want to be like, oh my God, I didn't win this trade. People, how many points is this from entry? About 93 points from entry. Somebody better be pulling profits.
I'm 300% on the account that I started last week.
Dude, congratulations on that. If you guys don't know, Stefano started a live account challenge kind of situation just to kind of show you guys what he's looking at and to show you guys how he's trading. And he's been keeping a MyFX book log of that entire experience, and he's up a significant amount on that account. Not in terms of dollars and percentages, which is really the name of the game. 300% in a week or in a week and a half, that doesn't happen. Especially not with proper risk like he's using. So I love seeing that, Stefano.
It's crazy, bro. It's crazy. It could be done, you guys. It could be done,
Real quick, I need a favor from everybody. If you're on YouTube, go ahead and smash that like button and go ahead and hit the subscribe button. If you guys are on Zoom, I need you guys to take out your phone, go ahead and tag us on your story on Instagram. Go, boom, take a quick picture or take a video, say on with the Chart Addicts team, and then just tag at Chart Addicts. If you guys do that, we'll put you in a raffle to win a free Bored Ape NFT. That's right, a free Bored Ape NFT. Right now, floor price around, I haven't checked, around 17, 19-ish. Solana's around $35. That puts these NFTs around $500 or $600 a pop right now. So if you guys want a free $600 NFT, which in the future has that potential to go up, make sure that you guys tag us on your story for a chance to be entered in that raffle. We'll pick a winner today. I'll put it on story or IG live. We'll let you guys know who the winner is, and we'll send you your NFT to your Phantom wallet. Personally, you guys know that I love the Bored Ape Solana Club community. I'm going to show you guys my virtual background collection. Hold up. This is Benji the Bored Ape. Benji the Bored Ape is wearing the same hoodie that I'm wearing right now, and he's also the official mascot for Chart Addicts. He's part of the Bored Ape Solana Club project, and really excited for you guys to check that out because we did a partnership with them. If you own a Bored Ape, you also get 25% off your Chart Addicts membership. So Bored Ape Solana Club to the moon. That's all I'm going to say. All right, people. News hitting right now. He's taking his seat. Let's see if we can actually pull up this thing live, and maybe I can translate in English what they're asking the reserve chairman.
While it is important for the Fed to fight inflation, I would caution against any.
Let me know, guys. Can you guys hear this from the computer? Is it playing through to you guys? Because I can hear it from my screen. But let me know if it's coming through for you guys.
That ignores
We can hear it.
its maximum employment mandate and results in a recession with millions of people losing their homes and jobs. You will also note, you should have noted that last week, the House passed my bill, HR 2543, the Financial Services Racial Equity, Inclusion, and Economic Justice Act, which directs the Federal Reserve to consider the impact of all of its decisions, including setting interest rates on communities of color and underserved communities. Congress has a role in fighting inflation also.
Yo, who took this trade also? Let me know in the comments. Who took this trade?
To inflation. The housing shortage has allowed corporate landlords to hike up rents, forcing families to make difficult cuts elsewhere in their budgets. The Fed's interest rate hikes will make borrowing more expensive and thereby.
What's up, y'all? We're with the Chart Addicts team right now, making money on YouTube,
But without action by Congress,
looking at the Fed news.
inflationary pressures will remain.
We're in profit on these
because there is
longs.
simply
We
not
got the whole
enough
squad out here on Zoom.
being built.
We got the
And they're
YouTube
moving
streams,
into
YouTube comments going
places
crazy.
necessary investments. That's why it's so important.
Let's make some money.
That we pass the housing title of the Build Back Better Act, which provides over 150 billion towards new housing construction.
I'm going to be real. It really doesn't matter what they say. Whatever the markets are going to do, they've predetermined before. They could be asking him good questions, bad questions, unless something material changes in the economy and he pivots his entire stance. Then we might have a huge shift in the markets. But whatever they're planning on doing, whether it's pushing the market bullish or breaking it down, is already baked in. I personally believe that it's going to continue bullish. They don't like to see red screens when he speaks. That's just something I've been trading the Fed news since probably fucking 2018. And I've seen this happen over and over and over since 2020, since 2021. Out of the 12 Fed meetings and now 13, out of the 13 Fed meetings I've seen, we've reacted 10 out of the 13 times in a bullish manner when the Fed chairman got on stage. I just feel like when CNBC is putting this and Bloomberg is putting this stuff on, they normally have his face and they normally have the stocks right next to him. I just want to see green, 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 because it makes the Fed's credibility a little bit higher, and their credibility is in question. So like, I would expect the most powerful institution in the world to want to protect their credibility as much as possible. They can pump prices before they can pump prices whenever they want. So I feel like that's what they've been doing. Just a big, big, big hypothesis. Okay. That is not based in fact. That's just kind of what I've seen from, like I said, the 13 previous times. Did you say 300% in half a week? No, it's 300% in a week and a half. I think it's 2 weeks.
2 weeks.
2 weeks. He said, I'll believe it when I see it. The MyFX book is out there. If you're a Chart Addicts member, all you have to do is look at the MyFX book. You people are funny.
I'll post my FX in the story.
Okay.
Yeah.
Go ahead and follow Badass Trades FX. And while you're at it, go ahead and follow Chart Addicts.
Let's go.
On Instagram. I'm securing a bit more partials and letting the rest ride. All right. So I've just secured a little bit more partials. And I'm going to allow the rest of the position to keep running if it wants.
Might be kind of risky, but I took a short at that triple top at that top.
It makes sense. The shorts make sense. I just don't want to trade against the Fed news or the Fed speaking.
Yeah, I hear you.
But I mean, even U30 is at this triple top right now.
Yep. I see all those, so I had to.
Let's see.
Yeah, I'm in US 30 shorts.
Yeah, the US 30 shorts look good.
36.50.
Y'all gonna make me close my last trade.
I told you.
I got in at 11.633.
I closed more partials, but I'm still holding for the I'm still holding for that pump.
It's like also NAS on the 4 hour is showing like a head and shoulder right there. So it's kind of weird.
You see it, Stefano?
Yeah.
I mean, dude, we're at massive daily resistance. If I can show you where we're at in the overall scheme of things.
You see that head and shoulder? Yeah, it's kind of like a head and shoulder right there.
Here's the previous weekly support. That became the weekly resistance. We have from high to low. This is a double top at the 88.6.
That's fun.
The only thing is this giant wick, dude. Like if it engulfs the previous candle, then I'll actually see it falling all the way to the downside. Let me zoom in here. If it engulfs this previous candle, if it breaks or closes below this low, then I'm seeing bears to the downside. But if the body closes above, then all I see is low, higher low, and potential higher high. And that doesn't mean it can't just like push up here to the previous highs and then crash. It could do that too. But for now, I'm seeing that support being formed. I'm seeing the body of the candle closing above. It still looks like it's going to push through.
And the wick rejection, it's wicks all over. So
I know it's the wicks for you.
I'm holding that long.
It's going to take a while. What are they saying over here?
Needs to focus on the middle class, not the chirping political class.
Hey,
This was
yo.
true before inflation broke out. It's all the more obvious today.
Bow tie though. Sheesh.
Chair Powell will deliver that message to his colleagues.
This dude looks like he's doing a skit.
And again, I want to thank Chair Powell
Is he for
for
real?
his testimony. Thanks for his willingness to engage with policymakers on the Hill. And thank you for his openness and what has been.
Jerome look like he's ready to drop some news.
Bro, he put the glasses on. You see how quick he put the glasses on? Yesterday he was
It's about
looking
to
real,
get deadly in here.
he was looking real tired and shit. The second he started asking him serious shit, he got a text from somebody on his team. They said, yo, stocks are dropping. Put your glasses back on. They said, sit up. All right, well, there's that short. I moved
Yo,
back
who
down.
is that? The background of that.
Who, this? What were you asking?
Yeah, I'll say it in a second when she comes back on.
Just to give you guys a heads up on NASDAQ, my entry is at 525. Excuse me, 525. So I am in break even. My stop loss is at 530. 11,530.
Yeah, I see this thing is closing bullish today for some reason.
I'm with you. Just gonna have to give it a second. It takes time, man. It takes time. The key is to get the right entry so that you don't have to like I'm in break even, it's retracing whatever, but unless this thing is gonna go blow through my stop profit and blow back up, which is very rare, I would say I have such a good entry that I'm just willing to hold this. Right? It's gonna retrace a little bit, whatever. As long as I'm still in profit, I'm gonna hold this trade out.
Yep.
As we face the worst inflation the country has seen, at the same time,
Short calls were good.
Yeah, short codes were good.
stimulus bill. They were pushing the Fed to solve climate change and social ills, and they flirted with unconventional monetary tools like yield curve control. Today, as gas prices top $5 a gallon, these left-wing ideas seem like a fever dream from an alternative universe. But many Democrats felt.
Like, I'm gonna be real, guys. I used to work up in Capitol Hill. I used to work for a few congressmen. Like I didn't work. It was like free work because the internships there are unpaid. But basically, instead of going out there and actually asking the chairman something that's important, something that's going to help help push the ball forward, what they do is they go out there and try to sound good. They try to put blame on the other party. Like you'll tell it, like he's like these liberal ideas or this and that. Then they'll ask him like, do you believe that Joe Biden's policies of doing this are hurting our economy? Like they'll try to get validation for whatever they're pushing from whoever they're getting to speak. Powell knows this. The whole fucking world knows this. But sometimes Powell, like the speakers, they let shit slip because it's frustrating to be in there for 2-3 hours. They break you down. So that's kind of what we're watching for. Their questions, their speeches, all the shit the congressmen are saying, fucking useless. The speaker who they're actually inviting on, that's the most important piece of this. And how they respond is like they're very strict. They're very good at what they're doing. And then the longer they're in that room, the more they start to get broken down. They just let some things slip. And that's what I'm watching for. Just gonna throw that out there.
Hardship that high inflation is causing. We're strongly committed to bringing inflation back down.
And whoever was asking, were you guys asking about who this is? This is probably an intern that's taking notes.
To restore price stability.
She's about to make the markets go up. I don't know what's going to happen.
It is essential that we bring inflation down if we are to have a sustained period of strong labor market conditions that benefit all. I will review the current economic situation before turning to monetary policy. Inflation remains well above our longer run goal of 2%. Over the 12 months ending in April, total PCE prices rose 6.3%. Excluding the volatile food and energy categories, core PCE prices rose 4.9%. The available data for May suggests that the core measure likely held at that pace or eased slightly last month. Aggregate demand is strong, supply constraints have been larger and longer lasting than anticipated, and price pressures have spread to a broad range of goods.
See how it goes to the levels to the T, like goes to 61, then comes back down to the 50, tests the 50 and rejects, and then so on. So
it's like a stair stepper with higher lows and higher highs. So this is actually pretty straightforward. Some days a little bit different, right? Some days like the market is just being very difficult. Today the market is being pretty respectful. Okay, it's like there is like a little bit of low volume, but what I think it's doing is it's accumulating orders on both sides. So I can't really tell you which way it's going to bounce at this point just because of all the volatility, but they're loading up anyone who's loading up on shorts or everyone who's loading up on longs. When it finally pushes in that direction, the losing side is going to fund the other side. So they'll just kind of hang out here and keep loading up positions for shorts, load up positions for shorts, load up positions for shorts. And then if it breaks up, I think that's why it hangs out there for a while. But time will tell. Higher closure looks good. We are at a major level of resistance. I'm not being like naive about that, but I just feel like the momentum this week is so bullish. We're still creating higher lows, I think we can push up one more time for a nice drop.
To push up to 31,000 for U30.
So you chopped out a little bit. What was the first part of the question?
Do you think it'll push up to 31?
The target would be 30,800, that whole area. So previous area, like all these wicks, that's the selling zone. So this would be the area that I'd be looking to see if price will reach, but we've already created a double top right here at the 78. So this is the high all the way to the low. From high to low, we're creating a double top here at the 78%. I think this thing could retrace a little bit lower and then push up. All right, if it just stalls right here, if it just like starts to form support, then it can just break up. So this is kind of like the whole thing of identifying a reversal versus a continuation is all about how the candlesticks react. So you already have the wick rejection. That should have been the indication to enter at the 78 as price was rejecting. Then price stalls here. What you really want is for price to continue to the downside after if you're in shorts. But if it continues to form support here and it won't break, that's an identification that the market is going to continue bullish. It'll form like a few candles here and just refuses to break. Then you know it's going to push up before it drops. So being able to identify a continuation versus a reversal, one of the biggest skills that you can learn in trading. And that's really just about candlestick pattern recognition. Is can you understand what the candles are telling you about what price is doing? If you can't, it's going to be very hard for you to know what you're looking for. So that's just about, education. So we're doing over here at Chart Addicts. You said she's bad. Well, chill out. Keep your eye on the ball. Waiting on the retest for more entries. This is crazy. Perfect double top on U30. Yep. This is what I mean by forming support. So sell entries would have been as close to the highs as possible. I am trying to keep my eye on this NASDAQ. Let me see what the dollar's doing. Like the fact that the dollar hit 105.8 is insane to me. The higher this thing goes, like I said, the closer we get to the Fed printing money, because that's one of the only ways that they can bring the dollar's value back down is one, introduce money to the economy by buying up securities. The second one is to lower the interest rates. Either one of those is bullish for stocks. So I'm waiting for that scenario. Everyone is waiting. Well, not everyone. The Fed, like everyone who's trading Fed sentiment, which is kind of like, in my opinion, the smartest way to trade now, because whatever the Fed does tends to move markets. If you're trading Fed sentiment, you're waiting for them to pivot from this very aggressive, slowing down the economy type of Fed over to let's let the party go, turn on the music, bring the drinks back in kind of Fed. So we're trying to get the Fed to lower interest rates to stimulate the stock markets again. And the higher the dollar gets, the closer we get to that point. And what do you know? What do you know? Big surprise. We do this.
These NAS loans are popping, man.
Well, let me know in the YouTube comments if you guys took the buys. Who took the buys? Come on, people. Said, what's good, Roy? Trader Kenny says she's hot. But you guys are funny. You guys are talking about that girl from the stream. You guys are fucking hilarious. This is great analysis. What do you think about the comments made yesterday about a possible 100 basis point hike in rates? So in the last Fed meeting, Jerome Powell said that 75-point basis hikes were not going to become common. That has become like the thing that all analysts are stuck on, because analysts get stuck on certain things. Like when he said inflation is transitory, they love to just clamp onto that and they hold him to that for the next months. And so he's saying that 75 basis point hikes are not going to be common, which means most likely the July hike is going to be 50 basis points. Now, here's some crazy shit. Last time around, the Fed is the one that leaked the news to the Wall Street Journal. They didn't really leak it. They fucking gave it to them that they were going to do a 75 basis point hike. They might do the same thing next time. And so they might, like, if they do change their policy, they're going to leak it first. And if they leak it first and it's the Fed that leaks it, we'll know what they're planning on doing. I'm expecting 50 basis points. But by the end of the year, they're going to want to do like 2, 3, or 4 more rate hikes. Guys, inflation has become the biggest thing. Nobody wants to become the Fed that let the cost of like bread go up to $20 a loaf. No one wants to be the Fed that helped inflation go out of whack to where the majority of the country who doesn't have any savings, who doesn't have any assets is getting screwed. No one wants to be the Fed that ruined America. So they're going to keep tightening until they see the inflation number come down. I used to say they're going to keep tightening until they break something in the economy. My new saying is they're going to keep tightening until they see the inflation number comes down. And the inflation number is so lagging that they're not going to see it come down for another 6 to 8 months. Like they're expecting the end of the year to end with 5% inflation. So they're going to do all this and still not get a result. So I don't think they're going to start easing until 2023. That's my personal opinion. If we go to war with Russia, if China invades Taiwan, if there's another coronavirus outbreak, that's different. They will step in. But barring any of those kinds of crazy circumstances, I believe the Fed will continue to tighten into 2023. Maybe Jerome Powell will give us a relief rally in December to boost morale like he did last time before the holidays. Other than that, I think the majority of this year and next year, we will see a lot of quantitative tightening, bearish stock markets, bullish dollar until inflation comes down. Bro, I want to do a one-on-one with you. What is it? I'm trying to learn from you. We have the advanced coaching program here at Chart Addicts. It is a $5,000 program. It's for 30 days. What you do is you work one-on-one with a coach. They trade with you. You have to give your coach the investor password to your account so they can monitor your performance. We find key performance metrics that help make improvements to your trading. We find out exactly what that issue is that's stopping you from being successful. And we try to implement procedures to help improve your performance. Performance, we look at it on like a very straight profitability, risk and reward, time spent in drawdown, and some of those key metrics. If those metrics are going up, then we can do our job and we can make progress. Those metrics aren't going up, then there's an issue in the trading. So know your metrics, know exactly what you're risking, know exactly how much you're winning, and it'll help you guys a lot in determining, what you should be doing with your trading. Alrighty, any questions, comments, concerns about the recession? Any comments, questions, concerns about the looming financial crisis? Any questions, comments, concerns about crypto? Let me know. Price of goods is still rising. DXY is still rising. Commodities rising. Stocks are bearish. Commodities are actually dropping. Stocks are bearish. Never seen this before. I haven't either. No economists have seen this combination. I want to show you guys some stuff. So I dropped a fundamental article on YouTube. You guys know I'm a big YouTube guy now, We got the Chart Addicts channel. It's going off. We provide a lot of free value on here in case you guys want to go check this out. And we try to put it in a way that's very digestible. So we'll go Chart Addicts, go straight to the channel. It's this video, this fundamental forecast video. So in this fundamental forecast video, I break down exactly what the recession is doing, some key metrics to look at in the recession, the US dollar supply, the DXY, the M1 money supply, NASDAQ, and how all those are correlating through the recession. I want to talk to you guys about something, and a lot of people in the comments were talking about how we're not in a recession yet because the official definition is 2 quarters of negative GDP growth. I'll explain to you guys, there's actually 3 definitions of a recession for those of you guys who want to argue about this. The first definition is the technical recession, which is the 2 consecutive quarters negative GDP growth. That's the economist definition. Economists don't actually bet on markets. Nothing that they say actually fucking matters in the real world. That's my personal opinion. I'll take that to the bank. The second type of recession is the NBER. All right. The NBER is the National Bureau of Economic Research. They kind of keep a log of the economic cycles in America and how they've been developing. So all the way back since 1950, the gray bars are all the recessions that we've seen. We have the 2008 recession right here. The thickness of the bar is basically how long it took to recover. And the number that they're comparing to right here is the unemployment rate. So what's actually good about this is the NBER is they're not fully saying that we're in a recession, but they are pricing it in based on a lot of if you guys go in here and read this, they're not saying we're in a recession, but they're saying, it looks like a lot of the factors that we're looking for are pointing towards a recession. The only thing that's not is the unemployment rate, which is pretty low right now at around 3%. If we actually were about to be in a full recession, we would see the unemployment rate a lot higher, probably above the 6 to 7% range. That would be like the recession territory. All right. So right now we might be at the beginning of a recession over the next 8 to 12 months where we'll see unemployment rates go up a little bit higher. The Fed is pricing in higher unemployment rates by the end of the year. And so that's why I'm looking like all the things that they're expecting to happen are claiming recession. So the NBER is forward looking a recession. We look at some things like, this is from the World Bank. I just pulled up a few charts here. This is global GDP growth. Okay. That does not look good. So obviously global GDP, like nominal GDP, has been going down, but lately we've kind of fallen off a cliff. And since 2020, the global GDP has been declining. So this actually doesn't go more recent than 2020. I think global GDP growth is still weak, but it's not as bad as it used to be. Growth is slowing down. All right, so here's how to explain it in terms of a household. You got your income, right? The money you make from your job, and then you have all your budget, the money you spend. Now, if you get into a lot of debt, let's say your car breaks down the same month, you have, something that breaks in your house at the same time, you have to pay a deductible at the hospital. Now, all of a sudden you had a bunch of debt pile up and you're still making the same amount of income. So that puts a lot of pressure on your financial situation. So how do you solve this problem? Most people, I'm just going to say this honestly, because we're kind of running out of time here. Poor people, middle-class people, on average, will start to save more and start to cut down in certain aspects of their life in order to mitigate that debt. And it usually won't work because you'll never be able to outrun the debt or the interest cost. The smartest thing to do is to increase your income, to make an extra $500 a month or $1,000 a month so that you're able to pay off that bill. So growing out of your debt is one of the most responsible ways to pay it down, because it ensures that you can keep what you have. You don't have to sacrifice a standard of living, but you can continue to make an improvement. It's a perspective shift. So GDP is basically getting another stream of income. It's growing the overall production of what you're doing, of what you're making. GDP is basically the size of the economy. It's either expanding or it's contracting. So in order for us to outpace our debt, not just globally, but in the United States especially, we have to grow out of this current crisis that we're in. How do we grow out of it? Well, the central government has to incentivize businesses to go do more, hire more people, charge less for stuff, make more stuff, export more stuff and bring in foreign currencies and do business with other people in the world, open up different supply chains, pay advertisers, and create flow in the economy. So the one thing that the central government can do is to incentivize growth in the economy to help us grow out of our debt. We can grow out of this recession if everybody gets on the same page about getting shit done. If nobody gets on the same page about getting shit done, we're going to be in an area of stagflation, which means there's no GDP growth. So production is stagnant. We're fucking failing, just kind of moping around, not doing shit. And we have an inflation crisis where prices are still going up. That's a very bad problem to have. And so that's kind of the situation we're in. We have a looming recessionary crisis. The Fed could easily print money, lower interest rates. The central government can reduce the taxes on small businesses. They can incentivize companies to not lay off workers, but keep workers by giving them some sort of incentive structure to keep people in a recession. And we can actually mitigate our way out of this by growing, producing better quality services to bring costs down and creating a deflationary environment. That's my solution to the fucking recession. Okay, that's exactly what's happening. They're crashing the economy to save prices from going up. We can grow our way out of this, but we refuse to. And the central government kind of sucks. That's why we're probably going to have a regime change in the United States this year. Just throwing that out there. Boom, shameless plug. I'm very shameless, so you guys can tell on this, on the stream. Very shameless. First things first, we do have an educational service. There are courses for beginners, intermediate, and advanced traders. Let's go through the course selections right here. So no matter where you are in your trading journey, you can go volume 1, volume 2, volume 3. The volume 1 course is split up into multiple sections. Section 1 is how to analyze markets. Section 2 is how to execute markets. So intro to technical analysis, price charts, how to use trading view, how to candlesticks. This is where a lot of you guys are failing. We were just talking about this. Okay, so there's a course here for beginners, and not even for beginners, but for everybody. So how to understand candlesticks, what the size of the candlesticks means, the anatomy of a candlestick, how to identify them in the charts, right? Open and closes and what they mean about price, how to identify certain reversal candlestick formations. This is stuff that everybody skipped out on. This is why you're like, oh my God, trading is all psychology. Trading is all psychology. Trading is not that much psychology if you know what you're doing. Right? A lot of you guys just don't know what candlesticks you're looking for, and you're stressing over the entry and you think it's psychology, but you just don't know what candlesticks to look for. And that confusion is causing you to hesitate on executing trades, and you're blaming some psychology when really you just have to figure out what are you looking for. If you don't know what you're looking for, it's going to be hard to find it, people, as like philosophical as that sounds. So that's what we got going on. We also stream for our members just like this every single day. You guys can see the schedule right here. Thursday, we have the stream. The stream's already happened. Tonight, 7 p.m., our very own Mr. CEO, Omar Kambal, is going to be going through the markets with the whole team. This is Eastern time. Then we have, I don't know where the Friday call is, but we have the Saturday backtesting. This is kind of like a beginners / backtesting call. Then we have Sunday, the Sunday market outlook. Then we have Mondays, we have the market recaps. Tuesdays, we're live trading early in the mornings. Then we have another recap. So every single day we have 1, 2, or 3 calls. So you'll be able to get on just like this, ask questions, and be able to talk to a lot of the traders on our team. We offer one-on-one coaching. Get on here, find a coach, find a time, and get on with them for 15, 20, 30 minutes. Talk about your trading, go through some things that you need help with, and get right on track. These calls and everything else is always recorded. This is the shameless plug. People, I said shameless, like absolutely shameless. I'm going through this real quick. Because if we don't tell you guys about the incredible things that we do, some of y'all might literally just keep losing money or overpaying for services that you have no business overpaying for. But all the recordings and everything in between is posted on the site. You guys can see all of our recordings from this year, 2021, 2020. We deleted the 2019 section because it just got too messy on the page. But if you really want our 2019 recordings, you can get those too. Who else has been keeping track of all the recordings so you guys can go back and look at our old growth and say, wow, have they grown? Have they been continuing to evolve? We keep everything on here. Our signals results, the Enigma Signals app launches in 3 days. The official launch is the 28th. Nobody else tracks their signals like this. All right. Every single month, month by month, the pip count, the win rate, every single month, how we've been performing, how many trades were taken total, buys versus sells, stop losses, break evens, take profits, average stop loss, average risk and reward, the pips. Can't make this up, people. We got the performance metrics right here. If you guys are interested in these, email us at info@chartaddictsfx.com. We can send this to you, or go right to our website, chartaddictsfx.com, right in the bottom. All right. Ladies and gentlemen, if you guys are interested in learning how to trade or trading along with our team, chartaddictsfx.com. That's my shameless plug. Still sitting in these buys, still waiting. Jerome Powell still speaking. I closed the majority of my positions. I'm still holding a buy position from yesterday, and I'm holding the position from today.
You're right. For the person that asked about the FX book, I posted it on my tab on the Discord group. If you want to take a look real quick.
The Chart Addicts Discord, all these incredible resources. You guys will go right here to the Badass Trades section. And Stefano has posted his results right here. So the CA Badass Trades account, he's using NVFX. Shout out to NVFX. If you guys want to figure out how to get on that broker, just let us know. He's got he's posting 267% returns. And he's also been gracious enough to post the chart to show us the growth. So June 14th is when the account was created, which is exactly a week and a half ago, almost. I said exactly and almost. So there was some ups, there was some downs, there was some kind of like pretty consistent break-even trading. And it only takes a few trades in a row of consistent profits to break out of that range. And so proper risk management here, never dipped below a specific percentage, and then has managed to break out 240% absolute return. An average daily return of 15.7%, which is kind of crazy. But if you guys think about trading, some days you might have a 30% return, and on other days you might have 3, 5, 10%. And so it'll average out to a daily of 15. Just keep that in mind.
True.
Beautiful, beautiful result. I want to put this on my wall. I'll put this on my wall. Do you guys know, like in high school, how you got like the cars or like whatever artist you were listening to, you had them in the locker? I'd put this in my locker. This is what I would have. Right in the locker room before we step out, I open up my thing like I'm an athlete. I open the thing, I see it. 267% absolute gains. I said,
and as soon as I close this trade, it'll be some more percentage in there, so it'll make it up to 300.
Fuck yeah! Are you sitting with a micro, or did you take partials, or what's going on?
I'm sitting here with one runner. So
beautiful. The fuck? Oh, I have caps lock on. All right, well, fuck that. Give me a second, yo. I want to show you guys this collection real quick. I said shameless plug. Shameless plugs the whole way through. Okay, looks like Solana's price went up a little bit. Okay. All right. So we were talking about the Bored Ape Solana Club. This is an NFT project that we are partnered with. I'm also a huge fan of the collection, and I have a few. So the mascot for Chart Addicts is actually Benji the Bored Ape. You guys can see Benji the Bored Ape is rocking the same hoodie that I'm posted in right now because we're dripped like that. Because Benji the Bored Ape is the coolest NFT in the collection. All right.
Yeah.
We also have a few of these other board apes that I got. I got this guy. He guards Buckingham Palace. We got Evil Knievel right here. Right? We got the fucking cigar smoking Gary V. You know what I'm saying? We got Caesar right here. You'd be like, Roy, why do you have so many of these monkeys? What do they even mean? What's even going to happen here? In the future, I'm really planning on doing like a story type series for a lot of these monkeys. You guys will see stuff on YouTube. You guys will see games, communities, t-shirts, graphics, whatever. And so the Bored Ape Solana Club project to me is something that I'm looking forward to being with in the long term. And Benji is going to be Benji's going to be the face of it. All right, so NASDAQ just popped off. Ladies and gentlemen, who's still holding this trade? Who is still holding this position? Talk to me.
Free money, y'all. Free money on YouTube.
Give me a second, y'all. I'm going to go to the restroom real quick. I'll be right back. Let me know if you guys have any questions, comments, concerns in the chat.
Also, guys, I'm targeting that negative 27. That'll be like ultimate target for me. I'm not sure about Roy, but I think I'll be good with that much, so, and I'll be out. I just close out for the day. Let me start scamming spamming the the YouTube chat. Let me go on YouTube.
Bro, I just walked back and heard scamming.
No,
chill.
Spamming.
We're shutting this whole thing down. We're shutting it all down, boys.
Yo. There is a lag. Are you able to control how much of a lag you have on your live streams on YouTube, or
no? I'll be honest, that's up to them.
Okay.
There are some ones like it's like the bit rate of the stream. So like the connectivity sometimes has a little bit of lag issues. I'm going to stop streaming through Zoom. I'm going to start using a different app starting next week. But this morning it was giving me some trouble. So I just had to go with the old reliable stick to Zoom. And also, y'all, if you guys have not tagged us on Instagram, it takes 2 seconds. If you guys want to be in a raffle to get one of these bored apes, as I was talking about, these apes are now worth around $600 a pop. All right. We got Comrade, Trippy Eyes right here. A lot of these guys, they could, they have a lot of potential to the upside. So if you guys are interested in winning one of these free bored apes, make sure that you guys tag us on your story at Chart Addicts. Tag us, and you guys can tag me too at Roy_Dunya. I only have one account. There's 50,000 fake accounts of me. I only have one real account at Roy ROY _ Dunya DUNIA. Alrighty. We already got some folks that tagged us. That's awesome. Who's still in this trade on YouTube? Who's still in this trade? My man David Howard is at the DMV right now on the stream trading with us. That's awesome. That's what I'm talking about, David. Tag us on the story. We are at Chart Addicts on your story. Oh, I saw Hazel. I see your post come up. There we go. Good stuff, y'all. I appreciate everybody's support on these streams. You guys know that we stopped doing these for a while. Honestly, y'all, I was just like, we just get on here and win every single time. Like on average, this is 162 points. Jesus. But on average, we get like 800 points, 100 points on these calls. They're usually at least a 2-to-1 risk and reward. In this case, we got about a 2.5-to-1 R&R on this, but we didn't really see that much drawdown. It was a pretty smooth day. So we stopped doing these. I wanted to focus a lot more on Chart Addicts. Now we stream all the time for Chart Addicts. We do this on the daily. Stefano does this every single day. You guys see what I'm saying? So at the end of the day, we figured, all right, let's get back on here, especially during this recession that's happening. Let's at least get people informed on what's happening with the recession while we do these streams. So in case you guys haven't heard, we are in a recession already. It's going to continue for the next 8 to 18 months. If you don't believe that we're in a recession, just look at the overall numbers in terms of GDP growth. Look at the overall numbers in terms of open jobs and labor shortage. Look at the numbers in terms of sentiment, manufacturing sentiment, consumer sentiment, and you'll be like, damn, this is pretty recessionary right now. So the ways to protect yourself is to not overspend. Now would be the best time to stop all kinds of consumer spending on shit that you don't need and to really park it in places that can actually help you grow, right? So you guys can decide whatever that is. You guys can speak to a financial professional. Chart Addicts members, you guys know what we're talking about here. We're talking about buying the dip. And so it's the perfect time to change your financial life. There's going to be people that build stuff. There's going to be people that invest during this period who get a second stream of income, who do whatever they have to do to be successful and to invest while this shit is low. And there's going to be some folks that just try to hunker down and try not to lose anything they have and don't really make any plays. And in 18 months, I think it's going to be clear which one of those you are, right? And then in the next 2 to 5 years, you'll figure out which one you are. The people who invested in 2017, they're the ones who had money, right? Back in 2019 and when things started to pop back off in the crypto markets. The people that bought the dip in 2020 when the pandemic first happened and Bitcoin hit 3,000. Those of us that bought the dip, we were the ones, spending crazy in Miami and going out and always traveling and doing all this crazy shit. Right. So whenever these markets dip and the people that load up, they tend to have a great 3 to 5 year span after because they've been able to generate some things. It's not financial advice. Past performance doesn't equal future results. You guys get the drill. But at the end of the day, these opportunities don't come very often. They come every 4 or 5 years, whatever it is. And it's your choice of whether or not you want to be involved or you want to sit on the sidelines. So figure out things that you can, that you trust, that have value, that you've put your research into, and figure out how you're looking to get in. This is Bitcoin right now. When we were up here, this whole region, everyone's like, oh, I wish I bought down here. Well, newsflash, I know it's kind of more shameless plugs. I was writing articles in March of 2020 on the Chart Addicts website, which are now still up here. Shameless. This is the pandemic aftermath, what's happening. Crypto comeback, why Bitcoin, why now? All right. April 10, 2020, why Bitcoin and why now? Crypto comeback. April 2020. Where's April 2020? That to me looks like the low of the market. Okay. Now, I haven't started writing articles urging everyone to buy crypto right now, but the most recent article that I wrote was the inflation crisis article, which says that I've started to dollar cost average into Bitcoin, which means I'm not like, the next article I write is going to be called Last Chance. And that's going to be right at the time where it's your last opportunity to get in before this thing takes back off. This area down here is a potential for us to come back and test, right? The 12,000, kind of like 12 to 18 range. This is an area where we could potentially test when it gets down here and it starts to stall, because I do expect a prolonged crypto winter before we start to turn back up. You guys will see me continue to write articles urging the community to get in while it's low. Just throwing that out there. We got our eye on the ball here. We know exactly what we're looking at. It's a function of timing. It's a function of waiting for the right factors in the economy to show themselves so we can have confidence to enter. Once those things show themselves, I'll be getting in. But dollar cost averaging is my current strategy, which means I buy a certain amount every Friday at different price levels. Okay. And I'll just keep doing that. And then what happens is when the market recovers, And I'm doing this not on margin. I do not trade crypto on margin personally. Trading crypto on margin has a serious risk to your capital. Trading, if I ever do trade or if I ever do invest in cryptos, it's only spot. If I'm buying one Bitcoin, I'm buying one Bitcoin. If I'm buying 5 ETH, I'm buying 5 ETH. I'm not trying to margin trade or use any leverage in my positions. So these are strictly just cash up. I'm buying Bitcoin at the spot price. When the market recovers, regardless of how long it takes, let's say it's a crypto winter, and then in 2023, we start to recover, every position that I bought down here will be in profit. And I'll have gotten a bunch of different entries all the way from 30 down to 10. And so my average Bitcoin price will be about 25K. All right, this is a rough number. Just let's say on average, 25K or 20K on average price for Bitcoin. Now I buy most of my heavy positions towards the bottoms. So I am expecting my average price to be lower than 20, hoping that's what dollar cost averaging does. And then when I go up here and price is at 67 back at all-time highs, then an average price of 20, we're at 67. That's a 3.5x return. Boom. It's a pretty good deal. Now, that is strictly my opinion. Please do your own research. And if you guys are going to dollar cost average, make sure to consult a financial professional before making any financial decisions. All right. So that's what we got. Trades ran. We made money today. We showed up and showed out on YouTube. It's great to see everybody. Any more questions before we hop off here? So Bianca goes, that was my second post on there. I love it. I love it. I love it. You can do it on your story too. So there's your actual, like the post that you can post, and then there's your story, your Instagram story. The story is just one of these cameras. What you can do is you can click it, or you can upload an existing picture, and you can just post it up to your story, and everybody can like click on your face and just go through your story and see what you're doing. Well, Instagram 101 for some of y'all. All right, y'all. Great to see everybody. Happy and safe trading. If there aren't any more questions, great to see you guys on the stream. I'm going to stop streaming on YouTube. Again, my name is Roy Dunya. I am the co-founder and CEO of Chart Addicts, the #1 education service in the world for traders. If you guys enjoyed this stream, make sure to click a like and subscribe on your way out. See you guys next week on Thursday for the next stream. Take it easy, everybody. Happy and safe trading. Peace.
Peace.
All right, boom. No longer streaming on the YouTubes.